it will need to upload information for you, but you can continue to work on a different screen.
Am I glitching at all, or should I switch to hotspot just so we're not stealing bandwidth from each other?
I haven't noticed you being glitchy.
I'm gonna do it just because of the storm, and
Sure.
I want any product associated with Robert to be top notch. So
I appreciate that.
As we all should. I am going to ask you though at some point, Robert, what do you use to track your time? Is it something internal?
Oh yeah, there's like a whole thing with law firms. We use Intap Time, and at my prior place we used iTimekeep. There's like a whole bunch of software services that are tailored to law firms that go out. But it's better. I still have my framed last physical timesheet from March 13th of 2020 because I would handwrite my time entries on a piece of yellow paper my whole career. And then the pandemic caused me to not go to the office again for a long time. And so I just had to stop being a troglodyte.
I have to tell you, just while we're waiting, I know we have a few seconds left, but I did speech and debate during high school. I was one of those nerdy little people. And I always had a yellow legal pad, and we would turn it to the side and we would frame out what the opposition was saying and how we were going to counter it. I'd love to see how a true attorney uses a yellow legal pad. And if you do at these points in time, we'll get into that. Things to ponder. Maybe not on this. But
I'll tell you, my daughter said that my signature was so bad she thought her teacher would think that she forged her parents' signature. So it may not be very helpful.
Welcome, everyone. Thank you for joining us for this rescheduled version of the webinar that we were hoping to host for you last week. We appreciate you all being here. And if you're joining us on a recorded viewing of this as well, we are pleased to have you here with Robert. And we're gonna go through some introductions in a moment. I do want to get back to your handwriting that you were just sharing as we were kicking into this call. But before we do, welcome. My name is Stacy Bishop. It's a pleasure to see you all here. And I am joined by two strikingly intelligent and dapper gentlemen that you are also seeing here on the screen. And we're going to get into these introductions. Mr. Bishop, shall we let Robert go first? I feel like we should. Guess first.
I mean, he's a dual chamber rated attorney, one of the few in the dare I say world, a top-notch fintech regulatory compliance, specializing in smartassery and sarcasm. I don't want to leave anything out, but no, he's a great guy. Always fun to have a dialogue with. So Robert, what did I miss on your introduction?
I think that's it. I work at Womble Dickinson US LLP, MLaw 100 law firm, and like Steve said, specialize in fintech regulatory compliance, and always look forward to hearing about something that I've not heard before, because my favorite things to do are the wonkiest things in the world that create the most unexpected regulatory compliance questions. So
I love this. I love this. We are going to go into an origin story with you too. I don't know that I've shared that with Steve, but I want to go down this path. But first, let me turn it over to Mr. Bishop. Mr. Bishop, would you like to introduce yourself? The one and only.
I'm Steve Bishop. I fell vastly in comparison to Mr. Is it Savoie? Is there like Savoie? But no, like Robert's a great guy. I've been in and around finance and technology my whole career, and excited to have this conversation, really dive into sponsor banking and fintechs and why you don't want to just use that attorney down the street who's good with your past dues, but maybe not with your fintech program.
I feel like the first question is, let's just go ahead and level set for the audience. Robert, how do you pronounce your last name? I feel as if it's a bit more French than what the Midwesterner that spoke previously just discussed. So hit us.
Well, it is, but I'll also say one of Steve's claims to fame is that he's the only person that has ever managed to give me a physical Bitcoin. Very impressive work. In terms of the last name, it is French. So my family descends from sort of the region in France next to the Alps, which is Savoie. but it shares a
Oh.
border with Italy, and those are Savoies. And so it's just same spelling, different pronunciations, and so it's where you came from. And then my family went over to Canada, and then got kicked out of Canada after the French and Indian
Oh.
War. And then they went down the eastern seaboard, and nobody wanted us to get off the boat. And then they went down to a disease-ridden swamp in South Louisiana, and they were like, "This is perfect for your family, and y'all can live here." And then a few hundred years later, here I am. So that's the long and short of it.
But you escaped. You're
Yes,
in Ohio these days.
that's right.
Did somebody check? Did somebody in Ohio check to see if you were allowed to be there, or did you just sneak out in the dead of night? I'm curious.
Well, look, as
Ask.
Christopher Walken said, I showed up at the border and showed them my passport, and they let me in.
I love this. Let's get to some items of value, but we are going to have some of these fun conversations because Robert, Steve mentioned that you are fun. You are hilarious. I have never not just laughed being around you, but I dare say you're also one of the most intelligent people that I've ever had the privilege of meeting. And that's what we want to showcase here, put on display, because I mention your name a lot to fintech founders, as I do as well. Jeremy, who is not able to be here. Sorry, Jeremy, I'm no longer going to mention you because you had a court session today during a reschedule. So sorry, buddy. Just kidding. But I
He
will
promised
say,
later day we're bringing Jeremy on. So
we'll bring Jeremy back. But I will say, Robert, I remember when Steve was going down the BaaS journey and standing up his first BaaS sponsorship, he was talking about going to an I think an AFC event, Steve. That's where you two perhaps first met. And he said, "Well, I'm looking at this guy as an attorney." And I said, do you not have an attorney there at the bank? Being in sales, being on the revenue side, I speak to a lot of bank attorneys. And Steve explained to me that there's a notable difference between a bank's general counsel, those that I'm most familiar with, analyzing, negotiating vendor contracts, individuals that are preparing commercial loan documents, et cetera, and the work that you do with fintechs and with sponsor banks. Can I just ask you to go into that a little bit? First of all, why you might be a little bit different than a GC, and then I have a follow-up question for you, Mr. Bishop. So pay attention.
well, I think if we can, before we get started, like I had chatted with Robert, but we presented on stage. We were on a panel. And we had one of the greatest disclaimers. So Robert, is there a disclaimer that you need to?
Oh, maybe.
I should. I'll give the same disclaimer that I gave in the presentation that we did together, which is that, please know that, the comments and the materials provided are not the views of our respective companies or organizations, the people putting on this webinar, or even our own. And so that was the disclaimer, which I thought went over very well at the presentation.
As it did now as well. I do have to just mention, we did get this comment from Soki, crazy and unique story about your family, Robert, coming in. Soki, if you get a chance to visit with this guy, dig in deeper to that with him, as I know I'm going to do off this call. So back to the topic at hand, before I was taken down a different path. Robert, what is the difference between a GC that a sponsor bank would be looking at and someone like you? Well, I'll start there.
Yeah, I mean, it's interesting. I'd say a few levels. I mean, one is that the BaaS programs are just different. And I'll harken back to an outside GC that was working for one of the big sponsor banks, and we were talking about loan purchase agreements and ongoing connective tissue to the bank post sale of loans. And one of the things they explained to me many years ago was that, look, with these programs, we just have a heightened degree of potential scrutiny, and we need to be better and show more diligence than just a regular bank that's selling loans, right? And in the payments programs, that has been the same, right? Where you look at, the Synapse bankruptcy and you look at some of the impacts that came from that, and there's a view that the programs have just a different level of scrutiny, and so they have to be more diligent. And the level of review is very intense because the banks have reputational considerations, and that causes the underlying agreements to be different, right? And so I deal with this with fintech clients all the time, where we'll have an early call And I'll just say, look, can we just level set? Like, are you experienced with BaaS programs? Have you looked at them before? Because if you're thinking that this is going to be the same as, a big bank that goes in and has an airline credit card, right? Or is providing a separate service, the structure, the focus, and ultimately the contractual language in the agreements that underpin the operations are going to be very different. And sometimes people are very caught off guard by that in terms of the allocation of responsibilities and the economic flows and the degree of diligence in context of that. And so I would just say a familiarity with it is, I'm very much not a general counsel. I'm a regulatory lawyer and we set up programs, and that is the only thing that I do. Lots of other lawyers at the firm that can help with other things, but I'm very specialized in this world. And so sometimes general counsels will approach it from the same way that you talked about, Stacey. You talk about vendor contracts and different things, and these are their own animal, and they're just very different and have to be approached in a very different way. And then the second level is that there's an interlayering of the regulatory compliance obligations. And I know that we'll get there, in a bit, but the relative responsibility and the marrying of program ownership with vendor roles is a little bit different, right? And and we can talk about contrasting that with other regulated but more vanilla contracts like debt collectors, right? Banks have always outsourced debt collection to third parties, but those are very different in terms of how you approach the setup of the programs and where the contractual obligations lie. So those are the things, which is just being mentally and emotionally ready for the intensity of a BaaS program and what it brings, and then understanding the structure and what everybody is going to expect to come in and how you document that. And that's just avoiding many rounds of lawyer revisions. And I never mind if somebody wants to do it their own way. I just like to tell them before they're going to have 2 or 3 rounds of billable hours from me before I actually do it. So.
I appreciate that. At some point, I'm going to have to share the story, Steve, about how you tried to book some time with Robert at FinTech Meetup just to get some free.
Oh, no, I didn't try. I did. But yeah, I got 15 minutes of free legal advice thanks to FinTech Meetup. So I really appreciate that. He was like, "Oh, we're gonna catch up." I'm like, "No, I brought these contracts. Let's go."
I will say we've had a comment also from LinkedIn. Robert, great comment about just setting expectations early between a specialized fintech related compliance attorney like yourself and a general counsel. Before I go and turn this back to Steve for a moment, I want to pull on that thread just a little bit. Is there a place for both inside a BaaS sponsor model? You're shaking your head yes. So yes, there is.
100%. I mean, these are specialized things, but there's a strong role for that, and we come in and we do it in a couple of ways. I mean, sometimes we're sort of specialized counsel that run alongside a company's commercial counsel, be that in-house or outside counsel, right? And we come in and they go, tell us how this is different, work with us, go through an eyeball, look at the term sheet, look at the ultimate execution of the term sheet, and we'll go in and assist there. And other times we run the whole program, right? We're doing the contractual negotiations and drafting, and in that case, my personal time is less, right? It's expectation setting at the beginning, looking at the boundaries of the program and what's likely to be negotiable and not, and then having the commercial lawyers go in and execute and make sure everything is ultimately what the parties want. But there is a role because, I think of things that come up anecdotally, right? And it's, hey, what are the reasonable vendor expenses? What about the financial statements that we have to produce? Is that actually realistic for the company to do? I'm not going to know that off the cuff. Now I know enough to know when the programs have not gone so well and what the edge cases were, and have been through a lot of negotiations, so we can flag those things. But it really does help a lot for somebody that's really familiar with the company and what they can reasonably do. And that's a small thing where, it might not, even register on my radar that a particular frequency or cadence of reporting on a financial basis to the bank matters, but I've had larger clients than I would have anticipated say, hey, we're not going to do a monthly financial reporting. Like, we don't prepare our reporting on that basis. That's totally unnecessary. And banks wanted to push for that. And so we came in and said, and that's not a legal or regulatory issue. And it's not even a commercial drafting issue. It's a business issue of making sure that the program and the expectations up front are aligned with what the business can reasonably achieve. Or even if it's something that's achievable, is it worth the time and expense, right? So that's something that you come back on and you go, hey, we're a new startup. Like, we're not going to do monthly unaudited financial statements. Like, that's ridiculous. No one else requires that. Investors, regulators, nobody requires that, just you. Why don't we do quarterly? And then we can reevaluate at the end of the exclusivity period or in 2 years. And same for like audited financials. So those are things that, they're not regulatory concerns, but they're more just business operational things that you want to run through and set. And the people that are closest to the business, which is always going to be those that are working for it directly or in-house there, or maybe a commercial counsel that's been working with them for 2 years until they finally got to me, may be more familiar with particularities about the company that might be operationally difficult, if that makes sense.
No, it does make sense. And I can see, just listening to you discussing the difference between the business needs and regulatory compliance expectations, I can see why you and Steve get along so well, because I know that's a lens, Steve, that you evaluate things from also, and different approaches than perhaps I would take, where I would say, okay, you asked for a monthly audit. I will do it. I will do it. Yes, sir. Thank you very much. And whereas Steve is a bit more like you, Robert, like, but why do we have to? Does that make good sense for us as a startup? Well, I'm curious. So, Steve, obviously you've shared that you liked Robert from the moment you saw him. You knew that he was a twin soul just from the hilarity and I won't say irreverence on stage, just the fun factor on stage. But I guess, Steve, at what point did you realize, as I'm learning and digging into sponsor banking and embedded banking as a whole, I need somebody. I need someone in my corner to help me draft agreements with fintechs or evaluate elements. I feel like it was early on as I was thinking about this, but I'm not so sure. Tell me what your thoughts are.
I don't know if there was just a specific moment.
Yeah.
The time frame where I met Robert and did a full attorney review and then identify it, that was when all these consent orders were coming out. And it's not dissimilar from your doctor. You have your primary care physician, but I'm starting a new business. I need to be compliant. I need a specialist to help me with this. And so that's where I went to, I needed that firm that's going to have the dedicated experience that my GC wouldn't have. And so it was all these things, and then talking with FS Vector as well. They had recommended having outside counsel as well. But at the end of the day, it was more of a bargain. Robert was on the bargain aisle. It was purely economics. He was the cheapest one I could find.
The dented can at the bottom of the grocery store shelf. You know what I mean? You get 50 cents off if it's the dented can, right? So I appreciate that description, Steve.
I mean, yeah, absolutely.
It's the cheapest one. That I do not believe that. Quality. This double chamber rated, gentlemen.
Exactly. Yeah.
Exactly. Steve, any questions that you might have? I know I've been doing a great deal of questioning. And I should say, let me add a disclaimer, Robert. Any of the prep questions sent in advance are not legally binding, and Steve and I reserve the right to go wherever our hearts desire. So with that being said, Mr. Bishop, over to you.
Robert has been impressive the whole time I've known him, and it's even better that you can have a enjoyable conversation. But Robert, from your side, what would you be your advice if there's a bank that's looking to get into sponsor banking or some sort of nuanced payments play, and they're looking for an attorney? I mean, obviously, if they don't know about you, what's your advice to you?
Well, read different news articles. No, I'm just kidding. So I mean, look, what I would say is it's an interesting business, and it is a little bit different from traditional banking, right? And whether it's me, whether it's anybody else, I mean, what you want to do is you want to understand the state of the industry, right? Because sometimes people will come in and they'll be off market in material ways. And what I'll see a lot with banks that are new to the space is that they'll have initial conversations about things and the way things are going to be, and everything will be really happy. And then they will run into the bank's lawyers, and then it becomes unhappy. And so you want to have a conversation to make sure there's alignment internally about the way that the business is structured and the way it's going to be run. and the operations, and we had a question, if I'm allowed to ask the question, answer the questions as they come in, since I figure out how to
Mhm.
click over to it.
Yeah.
Was there a step back in BaaS programs from the Evolve Synapse situation? And no, I don't think so right now. But it revealed a real concern, which was, how do you allocate and track for people's money in a BaaS program? And the BaaS banks, even though the change in federal administration maybe put the kibosh on the rules that were going to be targeted towards that specific situation, the banking agencies aren't going to just let a bunch of Americans lose access to their savings and checking accounts and not know where the money is, right? And so they're going to go in and look at this, and banks are moving towards, and have already moved substantially, towards live record keeping, to where that can't happen again, right? Because they impose on the programs the requirements. And I think that's a great example of, if you're a bank getting into the business, you may not think about that, right? In terms of live ledgering, daily reconciliation, so that there's no gap and there's no situation where, hey, there's $150 million in an FBO in a bankruptcy, and nobody knows who it belongs to or where it goes. And so, that's a situation that it is going to create a lot of additional regulation for the industry if those things persist, right? Regulation follows calamity or other problematic things that get a groundswell of opposition to. And so that's the thing that the industry has an obligation to take care of, because if the industry doesn't make sure that it's being run in a safe and sound manner, the government will at some point in time. And typically the industry doesn't like that. And so I think that, is there a step back from BaaS programs? No, I don't think so. Was there a step up in the degree of focus internally from the banks and behind the scenes pressure from regulatory agencies on that ledgering and reconciliation? Oh yeah. And that's going to continue, because it's some of the credit regulators don't like it when I say this, but I'm like, look, if a lender goes out of business, it's a problem. It's not the best thing in the world. But if an insurance company goes out of business and my house burns down and there's no money there to repair it, that's a whole nother level of problem, right?
Sure.
In terms of it, if I don't know where to pay my mortgage payment, well, I'm okay with that. I know that there's a problem, but I'll just kind of relax until somebody finds me and tells me that they need me to pay. And so what the consequence for the deposit and payments programs was, where's the money? Right. And you saw those stories of people that said, hey, I had my $50,000 life savings I was saving for a down payment house, and where is it? And so you get those questions. But, regardless of what the federal regulator is going to do in that regard, my observed experiences was that the banks did not want to have to wait and have the FDIC or the OCC come in and go, hey, what are you doing about this? They all looked at it and had a focus on it and had contract amendments to account for that. And certainly they put stricter provisions in on the front end for those programs. And that's an example of something where, if you're a new bank coming into it, that's a lot of context to not be aware of, right, in terms of it. And then if you look at things and you say, hey, here's contracts that are public and that were executed 2 years ago, or this or that, this looks very different. That's why. And so I think that's just, it was a great question to be timed to your question, because it reflects why you need to have some context in the industry.
No, I agree. And that turns up two things in my mind. First of all, I agree with you. And Soki, I would say, just from my seat, I think the market is demanding more embedded types of experiences. As consumers, we expect those experiences to be in apps that we use every single day. And I don't see us going back to going on to our digital banking applications, either mobile or online, and doing the things that we're used to doing in apps. So I think, to Robert's point, we as an industry are just getting better at how we address it. But the second thing that just occurred to me here, you mentioned the concept. I want to reflect this back to you, make certain that I'm saying this correctly. You mentioned that whenever there is some sort of a calamity in the industry, regulators typically respond with enhanced or additional types of overall governance and elements that banks have to take into consideration, have to manage against, have to govern against. What's interesting to me, though, is you, conversely, and individuals like you, FinTech Legal Counsel, you deal much more with the front side, trying to get on the front side of preventing these calamities in the first place. Is that fair to say? I'm not sure why that just now occurred to me, but it does seem a different type of timing that you have in the environment, and you're almost trying to look a little bit ahead to say, all right, well, there's nothing around this today that could be an issue, but I'm intelligent enough and versed enough in my space to know that this could become an issue if we don't handle this well, and we could see some regulations as a result. Is that fair to say, or am I giving you too much credit?
You're not giving me too much credit. You can give me more. Continue. This has really been nice. Normally, there's not such positive feedback to outside lawyers. So this is a nice break from my day to day. No, calamity preventer. I'm going to put that on my LinkedIn after this is over.
Own it.
No, but that is, I mean, look, compliance is a little bit of a different role, and it's an interesting thing because, when you think about like law schools and law firms, they mostly hire for litigation, transactional, labor and employment. Compliance is very small and it's a niche area. And I know most of the lawyers in the US that do this because most of us know each other from running into each other on different things because it's a fairly small universe. But that's one of the things I love is you got to look out across the world and go, hey, what are the federal requirements? What are the things that could come into play? And how are the regulatory agencies going to approach this program? And you have to do the same thing on the state level. And, our goal is for things to run smoothly, or at a minimum to arm clients with knowledge to understand risks that they are assuming when there's gray areas or it's unclear. And people want innovative products. Like you said, like Americans want new products. They want neat products that have different features from traditional banking products. And I do think there's going to be a continual desire for BaaS programs because that innovation is going to continue just the way that it has. And there's consumer demand. And wherever that demand is and it's not being satisfied by traditional existing players in the industry, that's going to go and innovate. Now, those things may become mainstream, right? You look at buy now, pay later. Well, the largest buy now, pay later provider is not a plucky new startup, right? It's now an established large company. And so if you think about the way those things go, that's a product that, while some regulators were curious about and some had misgivings about it, people wanted it. You know what I mean? They wanted it and they used it. And now it is in the fabric of the credit ecosystem because that's what people wanted. And so I think those programs are going to continue because that's how you have innovation. I mean, that's what we want. It's what America was founded on. And I think that's great stuff to have here.
No, I agree. Mr. Bishop, do you have anything, or shall I continue?
I think I would be curious on Robert's take and what he's seen. 2 years ago, we had all sorts of consent orders, and the CFPB was taking lots of actions. Since then, the CFPB has had a lot of change, and we haven't had any consent orders around sponsored banking. So, what are your thoughts about the current regulatory environment and advice for fintechs? I mean, you touched on it, as far as your calamity preventer, Kate. As you prepare for the future, what are your thoughts on this environment that we find ourselves in now, and then how do you see that changing in the future?
Well, I don't know if you know this, but this is not the first time you've had a more permissive regulatory environment, and then maybe down the road it changes. And so what we tell people is you have a 4-year look back, right? And so if the federal administrative agencies change, you can have a whiplash. And I would say, my experience is that, while there is less of the aggressive overreach by the federal agencies, there's still core banking, there's still regulation. And, the CFPB has been the hot button focus of that because it is the target of ire because of focus of overreach, not really for the FDIC and the OCC. I mean, traditional banking, I think, still has bipartisan support for prudent regulatory structures. And the details, the focus may change. And there's always debate about, how you should risk weight assets and now the rise of private credit. So those things will move on the margins, but it's not quite as dramatic as the CFPB. And so what we have counseled clients is, look, you've got to be mindful that you could have a very different regime in 2029, and they can come back and look at the 4 years previously and require you to disgorge funds and do restitution to consumers and do different things. So you need to be aware of that in mind. And then there's that business concern, right, about how you don't want epic failures that impact consumers to be happening across the industry, because that's how you get painful regulation. And so, I will also say that my observation is, particularly in BaaS, is that, people are not suddenly going, hey, we're going to ignore law. I mean, it's still highly regulated structures, and you have prudent people that have been through the back and forth, right? I mean, Trump was in office for 4 years and then out of office for 4 years. And so it's one of those things where, when interest rates spiked, nobody really had an interest rate spike in collective memory that was recent, and you saw after some of the bank collapses, you had the former FDIC chair from talking about, well, this is what happened in 1981. It's the same stuff. I don't know why anyone's surprised. I'm like, well, it's been a while. Some people forgot about it, but okay, fair enough. Interest rates rise, people misprice rate risk, and they go out of business. But they were talking about closing down banks in the 80s and stuff like that. But I think the regime change is different, right? Everybody lived through Trump to Biden's transition, and then what happened with the regulatory agency focus. And so I just, I don't, maybe there's some movement on the edges a little bit where you're less, I don't know, I've been called neurotic for the potential concerns that I could raise and just say, hey, discuss this. You want to think about UDAP, and, my UDAP analysis is very sophisticated. It's, would you do this to your grandmother? Would you give this product to your grandmother knowing everything that you know now? So look me in the eyes and say yes, and then we'll keep talking. But if you say no, you probably have a problem, right? And so, but I think the industry is generally, like, they're not abandoning consumer protection. They're not abandoning safety and soundness concerns, and they're aware of those things. And that's one of the things I love about tech is that most tech companies, they want to follow that tech mantra of, do good, right? And they want to build a product that people like and they use, and they want return customers, right? And that's animated consumer protection. It's why the FDCPA on a debt collection standpoint excluded pre-default servicers and creditors, because they don't need to be policed by federal law when they have an interest that serves their business, that they want to treat their customers well. And so I think all of those things go around where, maybe there's some movement and less fear about the legislation by enforcement concern, but I just don't think, and I have not seen some big migration away from sort of the prudent business approach of having a well-tailored program that has the things in place that it needs to be successful in the long term.
Yeah, I think that's well said. In fact, it harkens back to something I heard last November, this whole concept that you've mentioned about the differences that we've had in office, 4 years of Trump, 4 years of Biden, four more years of Trump. And the conversation was this: when I was at the Ole Miss Banking and Finance Symposium, they were talking about this same concept, that there's a danger in growing too comfortable with laxed protocols or more aggressive type of elements that we might be seeing in the industry right now, because who knows what's going to happen in the next couple of years. And as an industry, we haven't had that commonality, that common ground, that firm ground, because we have gone Republican, Democrat, Republican, and potentially we'll see how things go in the future. But it is a time. I like the grandmother test. We should be all thinking about the grandmother test. Would we introduce this to our grandmothers? If not, probably not something for your program. And that goes for the fintechs out there as well. I know you all are innovative and you're doing great things and doing good, as Robert mentioned, but it's something for us to consider in this space.
Yeah. And Robert, is there any story you can tell about something that you would not give to grandma?
Ooh, without naming names? Ooh.
I don't know. I don't know. I'd have to think about that. I mean, I have had discussions with people over the years where we've had products and somebody will describe something and they're like, I think this is what it is. And I'm like, why? I think that's actually like an illegal quasi payday loan product that would violate like 15 to 20 different laws. And like, I don't think it is. And I'm like, I think it is. But like, I don't know. I've read consumer credit laws my whole career in all 50 states. And, but to each their own. So you certainly run into products more often. We've run into products where they're regulated unconventionally, right? And you look at a product and you're like, hey, that's actually not a loan. That's a retail installment contract, or that's a retail charge account, where suddenly you're getting regulated under 1980s private store credit card laws that talk about retail charge accounts. So there's all kinds of funky things, and the test we use for would you give it to your grandmother. One of my partners, Aaron Kuhab, he was in-house for a long time, and he has this great test, and he would ask the marketing person, they'd be like, hey, we want to give the consumer the impression that, And then he would let them explain. And he would say, okay, great. Is that what's actually happening?
Oh,
And then he would pause and he would just let them respond, right? And so that's the test, right? Do people have an informed decision? And, you know, the CFPB after Dodd-Frank did all the big fancy UDAP analysis and all these definitions, but I've always thought that Aaron's explanation of that was just so succinct, which is the impression that you're giving the thing that is actually happening. Do you know what I mean? And I can lawyer up all the fine print in the world, but like you need consumers to understand what's happening. Do you know what I mean? And that's what a lot of that comes down to. And, you know, of course we've seen products that over time didn't articulate exactly what was happening. And sometimes that's a minor thing where, you know, you look at the FTC or the CFPB under an aggressive regime and they're saying you should have disclosed every single thing. Okay, fine. Like we didn't think to disclose that. We'll add a disclosure and it's not a huge thing. And then sometimes they're material, right? Where people think item A is happening, but it's actually item B, and item B has a materially worse impact on them compared to item A, and that's a problem. So I won't go into specific products, but you know, I see a lot of things in my practice.
I bet you do. The stories, I'm sure we could get you to tell. Actually, you're a vault. I know this. I know you're respectful.
When we do the wine tasting episode, you know what I mean, where we have the glasses of wine, I'll look forward to that. So.
Stephen, have you invited Robert to Bourbon and BaaS yet?
I have not, but he will. Robert, would you like to join me on Bourbon and BaaS?
That sounds great. So somehow I think Aaron is going to make it on there before me, huh?
Oh yeah, Aaron did get a little hurt that I invited you on here and not him.
Okay.
He got him confused. I said, "Hey, Aaron, you're with Bill and I. We can't ask him to have the Uber drive us there." But that's another story.
Well, I'm glad I gave him a shout out, and I'll be jealous that he got the one with bourbon. So that's good. That sounds like a great series.
They'll have to bring you back on. Well, we have a question, David here. It's such a poignant question. Robert, I'm not sure if you're comfortable commenting on this, but I put it up here on the screen. With the Synapse and Evolve scenario, what should have been the response from some of these regulatory bodies, the Arkansas State Bank Department, St. Louis Fed? Are you able to comment? Are you comfortable commenting, or would you like to did he just say, oh yeah?
Yeah, why not?
Here to play. Okay,
the disclaimer.
David, here you go.
We gave the disclaimer, so we're good.
Well, I don't know that David, that you'll like this answer. You know, but all the time. So the question, I guess everybody can see it. Like, what should the response to date? They've been silent, et cetera. You know, what I hear from a lot of clients is, hey, the regulator did this terrible press release, or all the time I see a press release that implies somebody did something wrong. But actually, I know because they're a client of mine and I can't say anything and they did the right thing. And those regulators, they don't come back and do press releases and say, oh, are bad. Do you know what I mean? At best, they just delete the web page on their website that just said terrible things about a company. And banking agencies are a little different. So one of my points of emphasis, I guess, is military lending and service member civil relief act. So I wrote the chapters in the American Bar Association's Fed Law treatise on those things. And the Department of what's that?
Go ahead. Double chamber rated. Go ahead.
Yeah. So I like to write. So but one of the things, the limitations of the Department of Justice is that they're not allowed to do rulemaking, and they're not a supervisory agency. And so they have no choice but to resolve things via public enforcement when they see something go wrong. And while they'll do courtesy presentations, it's just that it's not within their purview. And banking agencies can resolve things in a private manner. And all the time, the banking agencies will go to a variety of banks. They'll give instructions to their field examiners, and they'll go through and say, this is an issue that we saw. We want to look at what you're doing and make sure that the same risks don't present themselves. And so I don't think that from a public view standpoint, you can really criticize the department, because what matters is, what did they do to identify the risk and fix it and make sure that it's not recurring, and how to address that in other programs. And I have always liked the fact that in our highly politicized world, where everybody has to get on Twitter with everything and they have to go and comment on everything and all this, that banking agencies can still be disciplined regulators that can resolve things privately. And that wasn't entirely private, because there's certainly a public action in that regard. But like, I don't like having a banking agency that's going to go out and just crush people publicly. Like, what is the point of that? That doesn't help people, doesn't help the impacted consumers. It doesn't create good working relationships between the banks and the regulators. It serves no purpose. What serves the consumer protection purpose is that they go in, look at programs, and help banks operate in a sound manner. And so I just, I don't think there's anything else that they should have done, but that's a personal view. I always roll my eyes when I see a dramatic press release that says these people are the worst and they shouldn't have done these things. And we've stopped them from harming consumers. And this company probably went and found all the relatives and told them that they were stupid as well. And we stopped them from doing that as well. And then they add stuff that's not even in the consent order in the press release. So having negotiated a couple of hundred consent orders in my life, like watching the press releases sometimes, raises my blood pressure. So I don't think that the banking agencies owe a duty to comment about what they're doing. They have a duty to do what they're supposed to do. And that's what I would have confidence happened in that case, given the high profile nature of it.
Well, thank you for weighing in on that, David. Thank you for your question as well. This does bring to mind something that I'm just curious about. You mentioned having negotiated a couple of hundred consent orders. Is there something right now that in the space we should be cognizant of? I mean, the most recent consent orders I believe I've seen have all been around TPRM. There have been maybe some UDAP components as well, fintechs putting out blurbs or marketing information that couldn't be backed up or shouldn't have been publicized. What are you paying attention to?
Well, it's interesting. I mean, there's a few fast moving sort of legislative areas, right? Earned wage access is a big one. I think there's been a lot of focus on small business finance. There's been a rise in the number of commercial financing disclosure laws. And just because I'm a consumer credit and payments nerd, that imports TILA APR calculations. And so if you're looking for somebody that has a lot of fun with truth in lending and the requisite disclosures, I'm one of the people that likes looking at those things. But that's imported that into commercial finance, which was an industry that didn't have to worry really about cost disclosure in the same way that truth in lending happened. And I think that's going to continue. The challenge, I think, there is that you may have commercial finance end up where consumer finance was 50 years ago, which gave rise to TILA in the first place, where you had states having mildly inconsistent cost disclosures, which means that you have, small business applicants in this state getting zero cost disclosure, and that state getting cost disclosure A, and then somebody in New York getting cost disclosure B, because there's differences. And that's why truth in lending preempted contrary state disclosure. So you had one national standard. So that's probably going to come. And then, I think the area that a federal pullback most impacts really is the comfort level on UDAP, which is a lot of marketing, right? And what do you say and what the representations are, because it's hard for someone like me to articulate, here's the black letter standard, right? And so you can have companies that, hey, I don't have, we get comments all the time. Hey, well, point me to someone that's ever had this issue. And this is where my comment to David comes back and bites me in the butt, which is, I don't have anything to point to. If only the regulators would say something public, then I would be able to say, here's this. And so now I have to eat my own words a little bit. But UDAP is the example where, if you don't have anything recent to show, and it doesn't matter that it's some huge penalty or some small penalty, but if you don't have a rules of the road, and I guess I was remiss earlier that I didn't say in response to your attendance at the Ole Miss Banking Symposium, Hotty Toddy, proud Ole Miss graduate. I hope you said hi to Dr. Cyree, double major in banking, managerial finance and banking finance. So I hope you had a great time. Beautiful.
Nice. Sure did.
We don't need to talk about Lane Kiffin ever again. And so, but in terms of UDAP, I think Florida is actually a really interesting state where they actually promulgate UDAP issues. And I've always thought that was interesting when you think about the states as the laboratories of democracy and do things. They're not a big UDAP, know it when I see it kind of state. But I think their unfair trade practice law has like 38 discrete UDAPs where the legislature said, hey, we don't like this practice. UDAP number 37 is you can't do this thing. And so it's really interesting. It's like a totally different way of having that soft standard. But that's an area that we're looking at because there can be an area of less focus. And then what's also been really fun is people using AI to develop programs, to draft things, to do analysis. And I was talking to a client yesterday that were like, hey, thanks for that big quote for that big project. Would it be less if we had AI do this? And then you could review it. And I said, well, no, because now in addition to actually doing the underlying work, I have to look at the random things that AI includes that aren't applicable. And then I have to go explain to you why those are inapplicable to your product. And you don't need to follow those things because they apply to these other things. So I think that AI trend lines are really interesting, but a lot of that is outside of view. And some companies use it not at all. Some companies use it in limited cases where it's carefully controlled, and other companies are experimenting with it. And that's an interesting area where both in terms of regulating how you deploy it in consumer facing, but what functions it does and replaces internally, and how accurate that is going to be really fun to see over the next few years.
It's going to be exciting. It's like the wild, wild west right now. I think we're all waiting. Go ahead.
I referred a fintech to Robert last week who had used AI for his MSA and was having some challenges, but it is fascinating. Just want to be cognizant, party's almost over. So if anyone wants free legal advice for the next 10, 15 minutes, you can drop your comment or question.
By the way, David did thank you for your feedback, for your response on the Synapse Evolve. So David, thank you for being such a gentleman, so polite. The individuals that raised you would be very pleased with you. Steve, speaking of free legal advice, this isn't actually something super helpful to this group, but hilarious in that you and I got to witness Robert's, what did you call yourself? A credit payments nerd. We got to witness that on display about a year or so ago, right, in Vegas, Steve. Before I get into this story, anything more pressing or topical you'd like to get into here?
It was watching a fintech founder cry is one of my favorite things.
Stop it.
You're so bad.
There were no tears. There were no tears. Well, let me set you all up through this story. We're at this dinner, and Robert is joining all of us, various individuals from fintechs, various individuals that serve the fintech and the banking space, bankers there as well. And the fintechs that were in attendance at this dinner ranged in size from someone that's conceptualizing, getting ready to put out an MVP, the individual we're speaking of here, up to more well-established organizations. Robert knew them all. This gentleman that was there at dinner, getting some advice for free. Thank you, Robert, for doing that. Was just kind of curious. He had a solution that was in the payment space, and you very much took an approach that I wasn't expecting. And you were putting yourself in that position of, okay, well, how is a consumer going to be using this? Going back to an earlier question, what does a consumer think this is, the end user? What is it actually? How are they going to be using it? Have you thought about this? Have you thought about that? Tell me a little bit about, do you like those types of interactions when you get a chance to dig in with a fintech founder? Do you prefer, I guess I'm curious, do you prefer working with a fintech or a bank more? Who do you get to roll over the coals more?
So it's actually not institution driven, it's people driven. You know what I mean? And so you can have a bank with great people that I just love working with, and then you can have a bank where it's not so much, and you can have a fintech that's the same way. I don't know if you know this, but like there are jerks in every industry, and so outside lawyers, we don't have much choice. We got to work with everybody. But no, I love those interactions, right? I mean, you talk about product build, and I try to keep. I can't keep very much of it just because of my nature, but I try to keep at least a little humility, and I have seen over time. Fintech founders have done really cool things, right? And they've built programs that, like, in my heart of heart, I was like, there's no way that works. And then it turned out to be incredibly successful. Or, hey, I don't think there's any way to do this product. And then it turns out that there's actually a really creative way that solves the regulatory problem. And so, things that I would have looked at early in my career and just said, I don't think this works, Now what I try to have us and our team do is to frame up, hey, this is the concern. This is the requirement that comes in. Here's the regulatory requirement. And like, this is the problem that I'm having with the product. And what do you do about it? Right? Because I have learned over time that founders are way more creative than me, and they're way more creative than outside lawyers more generally. And so outlining the problem and then trying to figure out a solution for it, it is a much more valuable approach. And so that's what I like to do. And sometimes I think I miss my calling. I should have been a product lawyer because I love doing product work. And as outside counsel, you don't get to do as much of that. You know, you have a decent amount of just grind away and do your job kind of stuff. And so I always love it when I get to just, even if it's just over dinner, and obviously that's not legal advice, but you know, just troubleshoot a product and then raise issues to look at and think through them. It's super fun, right? And if you can take an early stage founder that, even if they're a couple years away or they're just iterating or talking, and I do those. I mean, I do multiple calls a month with people that end up never hiring me for their current model, but typically they'll move on, and that, I think that tends to come back over time. We'll go through and go, look, here's the regulatory concerns that I have. I think here's how you got to go and implement it. And then here's the things that you can do. And sometimes that has them pivot into a product that's lower regulatory scrutiny, but more successful for the business. And then sometimes we go, okay, I'm going to go raise some money. We're going to go deal with this in a couple of different ways, or maybe a limited scope engagement. And then over time, they build that up. So I love that stuff, but understanding how things work, how the consumer uses it, and then how the company gets compensated flushes out a lot of the regulatory concerns that you're going to have for a program, even though those vary a lot based on the type of product that it is.
Yeah, I see that in you, this innate problem solver that I've seen on display from both the fintech angle, helping these individuals, like in this example you just mentioned, and that dinner experience where we were all just sitting there just popping popcorn and just watching you work very, very nicely, very humbly with this fintech founder, but also then on the bank side, ensuring that the bank, if you're interacting with a bank, a sponsor bank, that they're taking care of, that they're thinking through all of these elements. And that's what I do feel is very unique about you, in that you do serve both sides of the equation here in the embedded space, which is something that cannot be understated. Now I'm just flattering him, Steve. Now, I mean, what you want to knock him down a peg or two? Or
I just feel sorry for his colleagues the rest of the day and week.
I'm gonna be insufferable. Just tell me, like, you're not paying attention, or you know, like my dad always said, keep your elbow up, Robert. You know, you're gonna miss the ball.
With baseball, got you.
Oh yeah.
I'm texting Aaron and apologizing right now, so just so you know.
Well, no, but I was going to say on that, Stacey, I mean, you know, one of the reasons is that I always want to minimize the amount of time that businesses have to spend with us, right? And you don't want to be on the phone constantly with a regulatory counsel, right? You have a lot of time when you're building a product, sure. But at some point, it should settle down. And you have day-to-day reg questions that come up, or operational things that you want to run by somebody. And we do a ton of that work, and that's great. But you don't want it to be going back and forth constantly when you're doing that, because you want to settle and then run your business. Do you know what I mean? Set the four corners of the framework and do those things. And so when you look at that, treating fintech bank relationships as adversarial is just going to cause you to have to come back over and over and over again. And it doesn't solve anything. I mean, really at its core, and maybe this is just my slant because I'm a compliance lawyer, but you want the program to be primed for success long term. And that doesn't mean individual programs continue forever, right? People change banks enter and exit the space, different things, you iterate, you have new products, but you want it to work well. And so there's an element of, you don't want to bind yourself to commercially difficult terms or other things like that, but you also want the program to be successful. And so you need to put it in a place where the parties are clear-eyed about what everybody can do, and then ultimately run and be successful over time. And like that's what we try to focus on. And that's the reason, is that it's so that you don't have to come back to me and go, hey, I think we're going to breach our agreement because we can't do ABC, or because I don't like that they required us to do this. And now you got to unwind a fully executed program or modify it, which is hard. You know, it's much harder.
And I think that takes us back to the beginning of the nuances that create the need to have a specialist. Like your GC isn't going to be as in tune with those nuances around the compliance that may come back and not allow you to do A, B, and C, right? Like those are the pieces that, like Robert specializes in, and like that's why you want to go get that outside counsel, have that specialty as you're building. Like these are not small agreements, these are not simple products. They're very, and there's not, the regulations are not easy as well.
That's so true. Well, gentlemen, in the last 6-ish minutes that we have, I want to get super tactical. So, Robert, most of the individuals watching this either live or in a recorded fashion are going to be individuals thinking about entering into the sponsor bank environment. What is the first type of asset they need to be thinking about when they work with someone like you? What is it, an LOI? Is it actual fintech agreements for sponsoring these fintechs? Like, where do you begin? Where so you go ahead.
Lots of cash. You know, I'm just kidding. I'm just kidding.
Megan bringing up in here.
So bad, so bad. No, I mean, you want to have a vision of your product, and you want to have an understanding of where you're trying to go in the program, right? And you know, it's interesting. Like we talked about AI, and I always tell people, you know, there are things where you can and should use those tools to minimize outside counsel spend. So all the time now, when companies come in and like, hey, can you draft this policy? I'm like, why don't you have AI draft it and then, you know, give it good prompts and then send it to me and I'll do a once over, right? I don't think you really need outside counsel. I don't know that you ever needed outside counsel to draft a policy, but you need it less now. And being clear-eyed about it. The other thing is there's a way in which people engage in outside counsel. And so I try to come back and go, this is an expensive question. I don't think you meant to ask this question. Why don't we talk about this on the phone? And when you're early stage, right, you just don't have the capital and the money to spend running down every single issue. And so, you know, a lot of times when we start, we'll do calls, right? And we'll go through, and maybe there's a prep or an agenda, and you'll run through themes and issues about the product. So I think having a sense of your product, educating counsel, and then being judicious with your questions. You know, lawyers, look, their nature is to run down every issue and to get everything done to the fullest fruition, because that's what we're supposed to do. And so recalibrating it to be business friendly answers and then getting the responses that you need is sort of a thing that people have to learn over time. And so I think, you know, coming with a fully formed program, a realistic expectation of the BaaS expectations the bank is going to put on you, and then getting a sense of the way in which you ask questions is going to be helpful in context of like realistically what you can spend in outside counsel time. So those are the things that I generally focus on, but a lot of that comes organically, where, you know, starting with calls is a little bit easier, because if you think about it, there's assessment, research if required, and then it's either communicating it orally or drafting. And I love to talk shop, right? So I'll just hop on the phone with anybody, and I'm like, you don't even need to give me an agenda. Just throw me 30 minutes on the phone, and you can just ask any question you want. And, you know, I'll do my best to answer. If it's a one-off thing that I don't know, I'll run it down for you. But a lot of those things you can just go off the cuff. Now, when it turns to funding rounds and expanding and growing over time and getting more investors, selling the product or secondary market work, well, then you have a higher level and you're going to have to document things, but also you've had the revenue that will then justify those expanded pieces of work product. And for us, fintech starts small and then grows large over time, because you grow and scale the relationship as the business grows successfully and has the revenue to support that grown relationship.
Okay. How deep do you get with the banks, the sponsor banks? And I know I need to be judicious of our time here, but like a banker like Steve, thinking about bringing on a particular type of program. He has his program set up at this juncture. Now he wants to bring on a new fintech partner. Is there any interaction, Steve, and I'll direct this towards you both, where you say, I need to speak with my fintech counsel about this, or are you making that business decision, Steve, as the banker? And if you do involve outside counsel, like a fringe type of program, what are you asking him at that point?
Yeah, I think a lot of that comes down to your compliance support, and they're comfortable. How comfortable are they with this program? Like, is this like, you know, it's not going to be your very vanilla program that you're going to have to go to outside counsel every time. Once you have your standard MSA, that's going to meet the needs most of the time. But there might be this nuanced program that really exciting and it's a great product, solves a valid need, but you're just not sure about it. And if it doesn't fit into that very bucket, like it's worth it just to protect yourself in case, just to go to the specialist and say, hey, this is outside my comfort zone. Am I okay with this? What am I missing? What do I need to understand? That's, I don't know. It seems like a genius answer, but
it's exactly where I was going to go, which is what we always try to do is if you're new to the space, you want, what are the programs you're going to do, template agreements, what are the regulatory expectations and why, and what are those things? And then once you set the baseline, the companies can kind of run, right? And you've established these are the programs you're going to do. And so it's really unconventional edits to your agreement that are going to change the focus, maybe a once over review depending on how much you want to invest in each individual program and go through flows or materials. And then it is, like Steve said, the outlier things where you want to go and say, hey, here's what the program wants to do. This is different than what we have normally done. What does it raise, right? And that's where we get a lot of is, tell me the universe of concerns that I need to do. And sometimes that's, hey, I'm looked at this, I would ask them these 3 things, 1, 2, 3, see what they say, right? If they say 1 and 2 is A, B, and C, I think you're fine. If they say something else, let me know, because it means they don't know what they're doing, right? And so those are the sorts of things that you'll run through, and that varies based upon how out of the box the program is.
I think that's a perfect illustration of just bringing this all together, why a fintech specialty counsel, in your example here, your case specifically, a compliance counsel, outside counsel, is different than a bank's general counsel. From, I think the big takeaway that I have, well, Robert obviously knows his stuff. I knew this coming into the conversation, but I know everyone else that's going to be witnessing him on display will also leave with that information, but also just cements for me the importance of having both in your life as a banker. There is a need for general counsel. They serve their purpose and they do it well. There is a need, if you're getting into sponsor banking, for someone that knows the environment, someone knows the areas of concerns to watch for, the calamity preventer, the guy wearing the cape, a gentleman like Robert. And with that, Robert, Steve and I want to thank you so much for joining us. Steve, I'm committing you right now, you and Phil both, to not only getting Aaron on to Bourbon and BaaS, but also Robert, because I cannot imagine a more entertaining type of spectacle than you three with a glass of bourbon talking about these topics.
We may have to record live at that bourbon bar in DC at the summit this fall.
It's a good bourbon bar.
It's a good bourbon bar. All right, gentlemen, thank you so much for joining us. I want to make sure we end on time so we don't screw up Robert's non-billable hours, and to let everyone else get on to their next meeting. Robert, thank you so much, kind sir. Looking forward to seeing you again very soon in the future.
Thanks so much.
Thank you. Bye-bye now.